afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday Hump Day edition. Hope you all had a fantastic trading session out there, even with that little bit of negativity in our markets. Today comes from one of the viewers. I forgot. I think it was Lisa. I think Lisa or Lori. One of you asked for this topic. Maybe it was Margaret as well. But one of you asked for this topic, and I know that when I talk about cryptocurrencies, there's many of you who don't like that, and they go immediately want to move on to something else and don't care. So I usually don't talk too much about cryptocurrencies, but today we will talk about cryptocurrency, particularly because Coinbase is right now in court with the SEC, and I listened to the testimony today, and I got to tell you what, man. When you have a lot of money and very powerful banking institutions behind you to the tune of Goldman Sachs and BlackRock and maybe many others that I don't know about, you get some damn good lawyers. And Coinbase in court, in my opinion, made the SEC look like a couple of idiot lawyers. Like they were stumbling and stammering and making not incoherent, but their statements weren't that clear. The reason I bring this up is obviously the court case with the SEC against Coinbase is going to create some groundwork, some parameters for the crypto markets, the foundation of these guardrails that I've been begging for quite some time. I want to see rules and regulations come in. I want the ability for any of you who decide to start up a cryptocurrency project to have parameters. This is what I need to do to be legitimate and not be frowned upon or scowled at by some regulator or some market leader like Jamie Dimon. So very important court case. I will definitely let you know what the outcome of that one is, probably on tomorrow's show. But the question came up, could you talk about the Bitcoin halving? And I thought, you know what? I haven't done a show specifically on that. So what I'm going to do is I'm going to talk quite a bit about math today. Really big. If you think about what's behind the scenes, behind Bitcoin, it's math. It's all numbers. And honestly, for those of you who are math lovers, if you step back and look at how it was constructed, it's brilliant. It absolutely is brilliant math behind the scenes. So let me tell you a couple of different ways that cryptocurrencies can be created. Some can be created, snap of the fingers. They can make as many as they want, unlimited, infinite resources. Things like Shiba Inu, which you guys know I hate. I think it's a total scam. I think if you buy it, you're an idiot, but that's just me. Shiba Inu, they said we're going to create one quadrillion of these. And in theory, they could create as many more as they want. They want to create another quadrillion, they could do that if they chose to do so. Of course, that would manipulate the supply numbers and wreak havoc on the ecosystem, but they could do that. There's other ones like Ethereum, which have a mechanism that rewards those who are participating in the network, and there's a constant creation of, I believe it's right now 2.5 or 2 Ethereum every 15 seconds are created. With Bitcoin, it's a much more structured mathematical approach. And if you listen to Jamie Dimon's commentary, I think it was on the Davos today, Jamie Dimon was making some comments and clearly did not know what he was talking about. It's rather embarrassing, honestly, that this individual was making comments about, they could just kind of keep making more and more Bitcoin and more. It's like, no, you can't. That's the whole point of it. It is the only thing that we have an absolutely clear, definitive number on in society. How much gold is there? No idea, we can guess. How much silver is there? No idea, we can guess. How many dollars are there? No idea, it's infinite. You know, that conundrum goes on and on and on. But with Bitcoin, it doesn't. And I'll show you that math right now. So let me give you a couple pieces of information just so you know the mechanics behind how Bitcoin works. Number one is Bitcoin is a decentralized marketplace. Anyone, including any of you, can participate in that network, which allows it to be extremely geographically dispersed. So if I wanted to, I could run a mining rig. It's a special computer that mines Bitcoin out of my house. If I do that, I'm now part of this giant network which maintains a copy of the ledger. A miner has a copy of the ledger on their computer which says, here's all the transactions that have happened since the beginning of Bitcoin in 2009. Right? It can go that far back and it has every transaction. And the point is, Bitcoin is this open, transparent ledger documenting where every Bitcoin has gone. Now, are all the Bitcoin created at the same time? No. They are emitted. They are created over time. And I'm going to show you that emission schedule here in just a second. So the things you got to know, the network is very geographically dispersed. It is decentralized, meaning no one person has total control over the network. And then here's a couple other very detailed pieces. And again, I would ask all of you today, particularly those of you who are naysayers or just don't know, ask me questions. Type it in the chat. Anything you want to know. Let's try to keep it specifically to Bitcoin today. I can do shows on cryptos down the road and other ones, but let's keep it pretty much on Bitcoin. So The halving, what does this mean? Well, some of the details you got to understand to know the halving is that with Bitcoin, a block is created every 10 minutes. Now, why is this significant? It's significant because Bitcoin is a blockchain. Each block is comprised of all the transactions that happen in that 10-minute window of time. So right now, this show has been live for officially 6 minutes. If we do this and say there's a 10-minute block for my show, all the content that we talk about and covered in that 10 minutes would cease after 10 minutes. It would be put into a block, which is encrypted. It's put into the chain, and then it starts another block. And the reason for that is to segment this chain, create reference points, and to secure the network. So every 10 minutes in Bitcoin, a block is created. And we could talk about those mechanics. Hey, Chris, good to see you. We could talk about those mechanics later if you want. I can go into details on that. But a block is created every 10 minutes. Now, the person that creates those blocks is called a miner. There is a machine out there called an ASIC miner. That stands for Application Specific Integrated Circuit. And an ASIC miner, think of it like your home PC or your laptop. However, it serves one purpose and one purpose only. Your laptop can run games and spreadsheets and screenshots, whatever you want. It does everything, right? So does your computer. These ASIC miners are designed to do one thing and one thing only. It doesn't run Windows, doesn't run all this stuff. It runs what's called a hashing algorithm. And its goal is to process and try to solve a computational puzzle. When it solves that computational puzzle, it literally raises its hand to the entire Bitcoin network and says, hey, I solved the puzzle. I get to make the block, right? So if you're a miner, your job is to try to solve this puzzle. As soon as you solve it, you let everybody else in the network know. You get rewarded for that. So if I'm losing anybody here, type in the chat. It's important. This is pretty clear. If you think Bitcoin's a passing fad, as Jamie Dimon has alluded to, it's not. It's here to stay. How big it gets depends on regulatory and network adoption, but it is here to stay. So make sure you understand this because you'll be using Bitcoin at some point in the future, I'm pretty sure, even if you are a naysayer. All right, so number one on that was a block is created every 10 minutes. I also just mentioned that the miners create these blocks, and the miners are rewarded with Bitcoin and fees. So every 10 minutes, when the block is created, that miner gets rewarded. And the reward is dictated, it's in the code of Bitcoin. It's in the code, and I'll show you what that is. So they receive a certain amount of Bitcoin plus whatever fees happened in that window of time. So let me real quickly go up here and show you. You can go out to it's called a blockchain explorer, and you can look at any blockchain explorer and find this information. So what I'm going to do here, my computer for some reason is running alarmingly slow. I'm going to go here to go to Explorer. This is btc.com. There's many like this. So let's just go down here and let's go to the Bitcoin Explorer, and this will bring up all the transactions. If you scroll down here, you can see these are the blocks. Here's block 826,183, and you can see 182, 181. You can witness all those blocks. Not only can you witness them, but I can click on this one right here, right? The most recent one was solved by Antpool, right? Antpool is the miner who solved the puzzle, raised their hand to the network, and said, I got it. So we can click on this, and you'll notice a bunch of details here. Number one is a lot of really analytical, geeky data. You know, you're talking the block size, how big it is, how much information was in there. You can see how much Bitcoin was in that, right? There was 3,562 transactions in that block alone. That's quite a bit of transactions in a 10-minute window of time. That miner was rewarded right here with 6.25 Bitcoin. So to put that into perspective, if I just do some quick math for you, let's say Bitcoin right now is at 42,000, and you times that by 6.25, that miner made $262,500 in 10 minutes. And I know some of you are here going, sign me up. Well, hold on. It's not as easy as you think to become a miner and get these blocks solved. Now, one thing I also want to add here is that miner was rewarded with this 6.25 Bitcoin. Remember this because that is what the halving is all about. The halving is coming up here at the end of April, maybe early May, and it's very important to our ecosystem for any crypto fans. Not only are they paid this 6.25 right now, but they're also paid this the fees. So whatever fees were collected in that 10-minute window on these 3,500 transactions, the miners earn that as well. So now, not only did that miner get that 6.25, they also got 0.86, which makes for a total of, I can't do it off the top of my head. Let's see, does it say it in here? It doesn't give me the total. What is it? 7.11 Bitcoin is what they got for this block. So I'll go here and go 7.11 times that by 42,000. This miner earned roughly $300,000 in a very short window of time. And you notice Ant Pool here, they're the ones that solved that last block of data. But look at Foundry USA. 1, 2, 3 out of the last 6 have been solved by Foundry. So they've made almost $1 million in the last hour. Exactly, Lori says, nice job if you can get it. Heck yeah, it is, right? So that is the reward and incentivization for the Bitcoin network. In order to have this massive, decentralized, secure, incredibly secure network around the world, you have to reward the people that make that network possible. In this case, those are the miners, and they are rewarded by the creation of Bitcoin as well as the fees. Hope you're with me on this point so far. So one of the things that you have to understand, the miners have significant expenses. So, and that's a great point, Pepe. It's not like these miners, it's just cheap. You buy a $100 item and you just do it. These guys have warehouses full. I'll real quickly just go to Google and search for you. Let's just go Bitcoin mining farm. Just bear with me as I bring this one up live here. I'll just pick on some images here, and you can look at some of these. These are, look at this one here. This is 1, 2, 3 stories high. As far as you can see, nothing but mining equipment, right? These are massive farms. So if you're going to buy one of these miners, this ASIC miner I keep telling you about, and think you have a chance, I'm sorry, you don't. You don't have a chance. You join what's called a mining pool. Now, these miners, those rigs, let me just show you here. Go Bitcoin ASIC miner. Right, so this is one of them. These are the real cheap end ones. Most of the stuff you're looking at now are like these, they're $5,000, $10,000, $20,000, $30,000 for a computer that looks like this. It's crazy. Yes. Big Ip says planned obsolescence mining Bitcoin by 2140. Correct, and I will get to that here in a second. You're right. Good to see you, Big Ip. So the expenses are not only significant from the startup, but the amount of energy consumption utilized to run those mining farms is astronomical. At one point in 2017, I thought, man, I'm starting a Bitcoin mining farm. And I was going to have a guest room here in my house. I was going to convert it. I bought all the equipment to build the racks and everything. And as soon as I sat down, I ran all the numbers, meaning the cost for startup, buying that, the networking, all the pipes. I had to get an AC unit because these things are incredibly hot. And then I added in the electricity cost. I would lose money every single day I mined Bitcoin. I would lose money every single day. And the reason for that is the electricity costs here in Southern California are ridiculously high. Now, if you live in other parts of the country, or you have a way to generate your own electricity, like solar, or you're an oil refinery and you can burn off your methane to power generators, well, now all of a sudden you have cheap energy and this makes economical sense. So for me, made no sense, because trust me, I would love to be a Bitcoin miner. I'd love to be a part of that whole system. I think it's fun. Lee says massive farms equals millions in hardware alone. Exactly. So the startup cost is really expensive. And if you think about it, people say there's no intrinsic value to Bitcoin. I would argue that's not true. One of the big intrinsic values is the cost to produce Bitcoin. Remember, Bitcoin isn't created out of thin air. It's created because miners are solving this puzzle, and therefore they're using computers to solve those puzzles. There's a cost. So there is a cost there. I'm in the wrong state, John. Yeah. I'm in the right state for many reasons. I'm in the wrong state for many others. It's that trade-off that we all go through, right? Some of you sitting right now suffering through cold and snow going, God, I wish I had a beach nearby. I have one right down the road, and it's beautiful. So, yes, it's extremely expensive. And therefore, the value of Bitcoin is that there was cost to, quote-unquote, extract Bitcoin from the code or the program. So, let me explain a little bit further about that emission curve that we were alluding to. First off, we want to understand the supply curve. So it's very interesting, and this is where I really fell in love with the brilliance of Satoshi Nakamoto, the guy who created this, or woman who created it, or entity, we don't know, is in the architecture of it. It's by design. It's really, really incredible. What puzzle and who wants it solved? Great. So I mentioned that those miners are trying to solve a puzzle. Basically what it is is Bitcoin operates off of a consensus mechanism called SHA-256. SHA-256 is an NSA encryption protocol that basically you put in a series of numbers and it spits out an answer. And if you put in the same numbers, it'll spit out the same answer every time. What you can't do is take the output and get the input. You can't go backwards through it. So it's a kind of a one-directional thing. So what happens with this puzzle that they're trying to solve is there's an output number that you're trying to achieve. And so they keep changing the front input numbers. And it literally just changing the 1 to a 2 to a 3 to a 4 to a 5. And I believe it's 5 digits that they're constantly changing to get this output. So they're constantly changing that. That's the puzzle. And that puzzle difficulty, for just so everybody knows, is constantly fluctuating. Because if more miners come in, they'll solve the problem faster. So as more miners come in and begin mining Bitcoin, like a new mining farm comes online, they increase the difficulty of that puzzle. And now all of a sudden, the puzzle remains, the difficulty increases, but the block time remains about 10 minutes. That is paramount to the ecosystem of Bitcoin, is that the block time remains at 10 minutes. If it drops to 5 minutes, all these numbers change. So it has to be right around 10 minutes. Can you do Bitcoin mining on cloud servers like Amazon Web Services? Sure, yes, you can. Absolutely. And Patel, there's a lot of people doing that, right? You're just using those resources. But remember, there's cost with that. Right, you can absolutely do it cloud farming. Oh, let's see. No frozen robot Teslas. Nope, none of that. Exactly, Martin Luther King Jr. Wow, a great name. I actually, I actually had a trivia question last night. My final question, just so you guys, let's have some fun with this one. I know I'm bouncing all over the place. I believe 1929, on January 15th, the great Martin Luther King was born. Unfortunate death at a way young age due to some arrogant, ignorant people. But he was not born Martin Luther King. Just so you guys, just as a trivia for fun, don't Google it right now, but what was Martin Luther King's real name? Type it in the chat. I'm curious if anybody knows this one. What was his real name, his birth name? Okay, so let me go through this emission curve. I think that this is fascinating by design. Here's what it looks like. I already mentioned that a block of data is created every 10 minutes, right? That's paramount to this whole thing functioning. The way that it, yes, it has a 256-bit key. Correct, Big M. The way it works is every 210,000 blocks, you can see here at the bottom, I've got 210,000, 420,000, 630, 840. So I'm just adding, every one of these hash marks represents an increase of 210,000 blocks, right? That's it. The way it was built, it's built into the code that every 210,000 blocks, the reward from miners gets cut in half. So the first 4 years, the reward for each block of Bitcoin was 50 Bitcoin. If I could time travel, I would go back to January of 2009. I would set up a nice computer. It doesn't even have to be high-end because nobody was mining Bitcoin. There was no competition. I would bring in my nice computer and I'd start mining Bitcoin. And I'd be earning probably 50 Bitcoin every 10 minutes. Just like clockwork. No, Martin Luther King's real name was Michael. Michael Luther King was his name. Anyway, your useless trivia for the day. Now you know, and as G.I. Joe says, knowing is half the battle. So, that first 4 years, and these cycles last about 4 years. So it takes about 4 years to go 210,000 blocks, and I will show you here in just a second. So that first 4 years, from called 2009 to 2012, you had 50 Bitcoin, was the reward for the miners. Because nobody was using it. There was no adoption, and it was, you just get them in circulation. Then all of a sudden, it was the first halving happened right here at block 210,000. When that happens, all that the halving means is that the reward for Bitcoin miners gets cut in half. That's it. That's all a halving means. And you can see here, the reward went from 50 Bitcoin to 25 Bitcoin. And then went for another 4 years. And at block 420,000, it got cut in half again. And it went to 12.5. Another 4 years goes by, and now we are right here. We are now in the 6.25 cycle. But notice the curve. Most of the Bitcoin in circulation, 50%, was in the first 4 years, was created in the first 4 years. Then you had 25% of all the Bitcoin in circulation in the next 4 years. Now 12.5, now 6.25. And it's going to continue to shrink as time goes on. So perfectly designed curve. And if you think about it, here's where the brilliance is. When something is brand new, there's not a lot of interest in it, right? So that's why the reward for miners was 50 Bitcoin. Satoshi, whomever that may be, planned this out and was thinking, okay, this should start to get some adoption. Therefore, there's no need to keep 50 Bitcoin until we have all 21 million, because there is a cap at 21 million. You will see why there is a cap at 21 million. Jamie Dimon, the dipshit, can't figure out this problem. I don't understand why he can't figure this out, but there's a cap of 21 million, and I'll show you here in a second. Yes, that big app, it's known as Bitcoin Pizza Day, right? Somebody in 2010 had 10,000 Bitcoin. 10,000 Bitcoin and bought 2 Papa John's pizzas. Now, Papa John didn't accept the 10,000 Bitcoin. The employee that worked at Papa John's bought the pizzas most likely and just said, okay, I'll take that 10,000 Bitcoin. Probably the best trade in the history of mankind. That is unbelievable. If you look at that 10,000 Bitcoin, I'll just bring up my calculator here again. I thought I had it up on the screen. Just to put into perspective how much that pizza costs in today's values, $42,000 times 10,000, that's a $420 million pizza. Goodness gracious. Amazing. Anyway, who initiates the halving, or is it automatic? It's automatic, Tweely. Sai. Okay, let me show you again. So see right here. Let's go back to this page. Apologize. I know I'm skipping around. If you look here, you see right now, it says right here, we're on block 826,184. All right, 826,184. That's where we are currently. If you look at the graph I just showed you, you notice here at 840. At 840,000, it's built into the code that the reward gets cut in half. Every 210,000 blocks, it gets cut in half. So when we get to right around the end of April this year, we're going to get the next halving. And the halving simply means that the reward will go from 6.25 Bitcoin to 3.125. Right? That's all it is. Halving is built into software, and miners and nodes choose to run. Correct. And it's general consensus. If you don't want to run it, you can, miners can go somewhere else. But the code is built, and it says every 210,000 blocks, the reward gets cut in half. Now, how does this equate to 21 million? You could run your own node when there is no Bitcoin halving. You could run your own node now. You could still do it now. Now, let me show you a spreadsheet I made just to illustrate this point a little more clearly. What I have here is the year, the blocks, the reward, and how many are in circulation, or how many were created. Right? And what I should do, let me add in another column here. Hold on. Let me just do some real quick math. I'll go insert. Oops. Oh, it's been insert. There we go. And we'll delete these. All right. So once I show you this one, let's go delete. We will do equals. Oops, sorry. We'll go equals this plus this. All right, just to give it an idea. And then this is going to equal this number plus that. And now I have the formula which I can carry all the way down. Okay, so this will show you the total number of Bitcoin that are created. Okay. So the way it works is this top line here that I've highlighted in gray. That basically shows you the first 4 years. In the first 4 years, there's 210,000 blocks created. The reward is 50 Bitcoin. So 50 Bitcoin times 210,000 blocks equals 10.5 million Bitcoin. That's the first 4 years. We are currently in this cycle right here. We're at that 6.25. So by April of this year, we will have roughly 19,687,500 Bitcoin in circulation. And that is diminishing, right? We're seeing fewer and fewer Bitcoin created every year. I have this column G here, shows you how many Bitcoin are created every year. Now, we're still creating a lot of Bitcoin, right? 6.25 every 10 minutes is still a lot. But notice once we go out 10, 12 years, it drops to under 1 Bitcoin. This is designed to not be able to print anymore. There will be not print, but to create any more Bitcoin after 2140. At 2140, there will be no more Bitcoin created. It will be done. All Bitcoin will have been created. So what they're trying to do with the halving is slow down the supply creation, if that makes sense. Remember, markets are driven by two factors, supply, and they're driven by demand. So let me show you another piece here I created, which I is basic, and I think some of you might have seen this before, but I wanted to just create that illustration because it does drive home why I think this is so significant. My target is $250,000 for Bitcoin next year, in November of next year, and here's why. The big part of it is this, that supply and demand equation. And I put in here traditional mechanism for price discovery because this is how we determine price for everything you and I buy, right? Your demand is impacted by supply. And if you're demanding more and more, well, typically they're going to increase supply to accommodate that. So there was that equilibrium point. Well, with Bitcoin, you have three driving forces. There's supply and demand, but then one factor that most people don't talk about is destruction. Destruction is Bitcoin that has disappeared and is no longer part of that 21 million. Because we know by the code, we know the way that Bitcoin is constructed, that the maximum we can have is 21 million. Great. That's fine. We know exactly the max number. I can tell you this, there will never be 21 million in circulation because many of them have been lost. Millions have been lost, meaning people lost their private keys, they forgot their passwords, and they can no longer access it. If that happens, that Bitcoin's gone forever, right? Now, let me go, exactly, Big Eb, get in soon, just buy a little bit. My thing is like, if you're the type of person that has like $100 extra a month that you just like, what am I gonna do with this? Buy $100 worth of Bitcoin a month and don't even think about the price. Just buy $100 a month and just keep doing that until you feel just keep doing it. Dollar cost average into it. So these are the three factors, but I want to show, the emission curve, which we looked at, right? That's this curve here, and it will continue to just diminish over time, and there'll be fewer and fewer and fewer Bitcoin created. So right now you have a world population that is not using Bitcoin, that is starting to use Bitcoin. We just got our spot Bitcoin ETF approval here in the US. People are just starting to get comfortable with the idea. Regulation's going to come soon and say, okay, this is going to be the rules for this and this. Now you're going to have more people chasing the same amount of Bitcoin. And what's going to happen to price? Well, it looks like this, right? If you look at the traditional method, it looks like that, where you can increase the supply to accommodate for demand. Well, if you look at this equation here, notice how different it is. Because supply is fixed. There will not be more than 21 million Bitcoin. So as more people decide to use Bitcoin, or maybe you're welcomed into the system, let's say this is our current price right here. But let's say that Argentina makes it legal tender in their country. Now they have a new president, which he has said he's going to do. That shifts demand up. And if we shift demand up, all of a sudden, the price of Bitcoin surges dramatically because supply is not changing. That axis doesn't move. So demand drives that price higher. And let's say there's more positive stuff for Bitcoin, and price will continue to surge up based off of that. So that is a very different mechanism than what most people are used to. Now, the other piece here is destruction. And I think this is a really critical piece. I'll 1 second as I type it in here because I didn't have it prepared. But if you go to our largest Bitcoin addresses, and the first one that pops up there. All right, here you go. 1 second. These are your largest Bitcoin addresses. And again, if you believe that Bitcoin can be hacked, I would encourage you to do so. If you look right here, this address, you can click on this address right here. It has $10.6 billion worth of Bitcoin in it right now. If you could hack it, if anyone on earth could hack that, it would be gone. So Bitcoin is the most secure financial network in the world. It's easier to steal from Fort Knox than it would be to steal Bitcoin. You just can't do it. You just can't do it. So when we talk about destruction, there really is no way to 100% accurately say this Bitcoin has been lost. Remember, we can see every Bitcoin. Like I have an address right here. This paper wallet right here used to have some Bitcoin on it. So I could look at this address and I could see where that Bitcoin is gone. I could check where it's all gone. So the general belief is that something, if Bitcoin has not moved in 5 years, the industry considers that lost. Because most likely you lost your private key, you can't access it anymore, so it's lost. So what's cool about this is I can go here to BitInfo charts. I can click on dormant Bitcoin addresses. And this shows you the number of Bitcoin that has not moved. And I'm going to click on 5 years. So in 5 years, right now, the total is 6.14 million Bitcoin has not moved in 5 years. So remember, we talked about having 21 million Bitcoin total in circulation. That's great. We know the maximum. But in reality, it's far lower than that. Because if 6 million have already been lost, then that means the maximum that can ever be traded in circulation is 15 million. So you guys see that what makes this unique, that dynamic is that supply number, while it looked fixed, is actually shrinking. That makes sense, everybody? What if we do this for 7 years, right? Just be a little bit more conservative. If I go 7 years, that means 4.4 million Bitcoin have not moved in 7 years. I think that's a more conservative number. I think you'd understand that if we do that, then our supply and demand dynamics change, right? So look at my graph now. If this was 21 million, and let's just assume that we've lost 6 million as we saw on the previous screen, what happens? Well, that line now shifts over, and what happens to prices? Those prices start to surge higher and higher and higher. So there's a lot of different components here, in my opinion, that are driving Bitcoin. Now, I know this was stemmed from the original question, which was, what is Bitcoin halving? Well, that is essentially the driver of supply and demand equation for Bitcoin. While we still have the 19.5 million Bitcoin, quote unquote, in circulation, the amount that are going to be created over the next 127 years is only 1.1 million. Actually, I think it's 1.3 million, excuse me. So in the next 113 years, only 1.3 million Bitcoin will be new and kind of brought into circulation. The other 19.68 million have already been created and are in circulation. So while supply was increasing significantly early on when nobody was using the ecosystem, now we have more and more people using the ecosystem. It's being used by, now all of a sudden, the Bank of International Settlements, which is the central bank of central banks, has now made it that it is okay for banks to hold cryptocurrencies as of 2025. That brings in a whole new set of buyers to back assets with a fixed number of scarcity items like Bitcoin. So the halving simply represents, long-winded answer to your question, which was, could you explain Bitcoin halving? It means that the reward for miners is being cut in half, that the supply, the creation of Bitcoin has now slowed down. It's decreased. We're going to go from 6.25 Bitcoin to 3.125 Bitcoin right around May 1st. Now, does that have an instant impact on price? No, it's not instant. It's not like a stock split where all of a sudden it spikes up. But remember, as adoption increases, meaning more countries use it, more people use it, more applications are built to spend crypto, then that will bring in more adoption. And when that happens, the price of Bitcoin will go astronomically higher. Now, I don't know if you guys caught it, but Kathy Wood said that by 2030, Bitcoin would be at $1.5 million. So let me just put perspective on my chart here. 1 second as I go back and look at that emission curve. 2030 puts us, let's see, here we are, and this is 2023. 2030 is like right about here. We'll be at 1.56 Bitcoin created every 10 minutes. That's about where we will be. How can we be assured that withdrawing Bitcoin after building up a sizable amount will be affordable in the future, considering fees and taxes? Well, Mark, it's a great question. The taxes thing, that's on you, right? You've got to report this. You're supposed to, but do you have to? You don't have to do anything, right? That's what Elizabeth Warren is fighting against. She thinks that a lot of people are using this as a way to or to get around taxes. And I'll be honest, I'm sure many are. I'm paying all the taxes on my crypto simply because I want no problem with the IRS. I'll be above board with all of it. That's fine. I'll pay my gains. As far as the fees for the network, that's to be determined. My guess is the fees won't get very high, but I don't know. You would imagine that the network itself would put kind of caps on it where it's not, you don't want to have a $500 fee to send, $100 worth of Bitcoin. The system wouldn't work. The other question that comes up a lot is, what happens when we get to the final Bitcoin in 2140 and there's no reward for the miners? Who keeps the network together? It's just people instead of collecting the mining reward and the fees, they would just have the fees. And the belief would be, and I echo this sentiment, that in 2140, millions, if not billions of people will be using it as a payment network. And if that happens, there'll be plenty of fees, so the miners have an incentive to stay there and do that. Let's Let's see, because you'll be found out eventually if you avoid taxes, in my opinion. I hate looking up much. Yep, exactly. And that's the same thing. I actually had, I have a bunch of Bitcoin I bought at a Bitcoin ATM before they asked for KYC. They didn't ask me for my driver's license, my ID, my social security, nothing. And I bought a bunch of Bitcoin that way, which has grown significantly. I think I bought it when it was at $3,000. So obviously it's a significant increase. But I've declared all that stuff. I haven't sold it, so I haven't paid taxes on it yet, but I will as soon as I go. Exactly, Lori. We'll all be dead by then. Hey, hold on, Lori. Let's not say that. I'm thinking better living through chemistry, AI. You know, I'm going to be I think I'm going to make it to like 190, maybe 200 years old. That's it. I want to be that one. Will Bitcoin Cash rally if Bitcoin becomes too expensive? Bitcoin Cash is a money grab by venture capitalists to make money off of Bitcoin. No one's using the network. I can show you here real quick. I think I can show you. Find out real quick. It's been a long time since I've looked this stuff up. Blocktivity.info is an interesting site that shows you network utilization. Now, it doesn't show all of them. It just shows some of them. But let's go over here. And you can see Bitcoin in the last 24 hours, you have had 398,000 transactions on Bitcoin. If we go down here to Bitcoin Cash, you have 18,000 transactions. No one's using it, right? It's garbage. So no, I think that this is slowly disappearing. It's not getting adoption. It's going to go away. So yeah, Bitcoin Cash is trash, as Martin says. I agree. God, Jimmy, normally I know that answer, but I had a brain skip right now, and I'm like, I can't. I've got skimming in many different ways. I can't off the top of my head right now, Jimmy. You stumped me. I can't remember off the top of my head, but I know what it is. I've been in the studio recording all day, so my brain's a little foggy. I apologize, but do you want to live to the age for real? If I can live happy and I can move and I can be mobile, yeah, absolutely. If I could be 200 years old and still go walk around and enjoy the beautiful California sunsets, or travel to Thailand and sit on some nice beaches, or go skiing in Lake Tahoe, absolutely I would. No question about it for me. Let's see. There's been talk about people accidentally throwing out their cold wallets and searching through dumps. Yeah, exactly. There's no reason to be sarcastic. There are people who have lost. There's a guy in England who had a hard drive from back in 2012. I think he was an IT guy, and he had like 10,000 Bitcoin on his computer, and he threw his computer away. And now it was worth like at the time it was worth like $250 million. I remember the headline. And he actually told the British government, you can have half of it if you excavate this dump. I know it's here. I just need to excavate it and dig it up. And they're like, no. Question, say Bitcoin does go to those 100,000s or millions per Bitcoin. How can people cash out when then cash out into what? USD is devaluing, so pricing gets confusing. It's actually better for you, Blue Diesel. This is where, if you're not a fan of it yet, this is where you really should be a fan of it. Because what you're dealing with Bitcoin is scarcity. It's fixed supply, 21 million, right? So if you buy some Bitcoin now, let's say you buy $100 worth of Bitcoin. Two things are going to happen. Number one, the value of the dollar is going to decline. Over time, proven fact, it's going to continue to happen. Your dollar will continue to decline over time. That's just because we print and have more debt. That's a fact. So the dollar is going to go down. So you took $100 worth of a declining value asset, the dollar, and bought Bitcoin. So your dollar would have been sinking. But now Bitcoin is going up because you have more demand and you have scarcity on your side. So in 3 years, 5 years, 10 years, that $100 Bitcoin could be worth $1,000. So you're going to buy back in at current market dollars that aren't devalued. So that's how it works. How could you cash out? Go to any exchange that offers it. My guess is you'll probably continue to see those exchanges offer Bitcoin, like Coinbase, Kraken, Gemini, etc., and maybe even more. I think at some point more banks will actually offer custodian services. If I look forward 10 years, I think if you can't beat them, join them type of thing. And your Chase, your Wells Fargo, your JP Morgan Chase will allow you to custody Bitcoin there and convert back and forth into cash. I think that just makes sense for a bank, because otherwise you're losing customers. What was Mark's question? Could crypto be transferred tax-free from one wallet to another, tax-free from customer to business, or from generation 1 to generation 2? The answer is 100% yes. it could be done tax-free. Now, it's all about the IRS knowing the address and watching that wallet. You know, for example, I have a ledger device here which has a bunch of cryptocurrency on it. The IRS does not know that this is mine. Now, what they could find is that the Bitcoin that I purchased on Coinbase was transferred to a specific wallet address. They don't know it's mine. They just know that that Bitcoin was transferred to a hardware, some wallet. They don't even know if it's where it is or what it is. Now, when I decide to move that Bitcoin from here to an exchange into my account, they'll know it's Merlin because I'm now depositing it in my account trying to cash it out. That's how they will know. So at some point, Mark, the question is, especially passing it from generation 1 to generation 2, is how does that person pull that money out? And is it a taxable event? And I think there's still a lack of regulatory clarity on that. But, you know, one thing that you could do is, let's say I've got, 10 Bitcoin on here. I got $420,000 worth of Bitcoin. If I cash that out on Coinbase, I, without question, am going to be under scrutiny from the IRS. Maybe I could go to another country. Go to Thailand, go to Europe, some other country, and cash out in the native currency. I mean, there's all kinds of ways that you could get around that type of system. But yes, I think you are going to have to report it. And certainly that's what the government is fighting for right now is, hey, we just want to make sure that you guys are reporting it and we can, track what you're doing. Got to watch Big Brother. Let's see. I'd like to see a curve of Bitcoin lost in dumps and elsewhere. That would be, well, I mean, you could technically, if you look at this chart that I had up here, the dormant addresses, this is technically it. As you're looking at, over time, this is that curve that had been lost. So you're kind of seeing it there. Good drug dealers or underground economy. Well, the thing with the drug dealer is, and this is, if you're a drug dealer or a terrorist or something, you heard Elizabeth Warren saying how, these Iranian terrorists or Hamas terrorists are all using crypto, or using Bitcoin. It's like, well, you'd be kind of stupid to do that because Bitcoin's totally traceable. Are there ways around it? Yes, if you're really savvy and astute, there's ways to get around your crypto holdings. There's things called mixers, which allow you to hide transactions, but those are under regulation as well. So, yeah, drug dealers and terrorists, they're not using that. They're using things that have anonymity to them, like Monero, Zcash, anything that has privacy coin aspects to it is better. But, it's... Again, we are still in the infancy stage. What else do I have here? I don't understand. Or I'm not going to that today. Drug dealers I pay. Cash is better for... Cash has been... Yeah, Margaret says cash is better for illegal activities. It has been forever, right? The US dollar is the most widely used criminal activity currency in the world, yet our regulators make it out to be that Bitcoin's this big culprit. Nope, not at all. Exactly, Rajesh. U.S. dollar has been used by more than any other currency. It's pretty sad. Anyway, I hope that helped you understand what the halving is. Now, what's its impact? It's generally a catalyst for the markets. It's a catalyst for the growth of crypto going forward. And I'll show you on a long-term chart. Hopefully I can get one. Sometimes it's hard to get a long-term Bitcoin chart here. Let me bring up, let's say, a monthly, and I'm going to go back a long time here. So bear with me as I bring this chart up for you. And where's my Bitcoin, BTC? And I think that the Bitstamp, this one only takes me back to 2012. So I apologize, I'm not going to get all the data here. It's impossible to find a chart that goes back to 2009 because no one was tracking it back then. But let me put on the chart here some vertical lines that show you when the halvings happened. So if you go here, and it was 2012, typically it's around November. That right around November. So that's your one halving. You go fast forward 4 years, so you go to 2016. You go into November. There's your next halving. You go to 2020, which is the next halving, and that was November of 2020, which brings us to there. Right. So notice after the halving, there's typically a pretty significant rally up, and I have this blue line here represents the next halving. And we are just a few months away from Bitcoin getting to that halving. And you can see here I have some graphics because this is what I expect to happen. I think that once we get to that halving point, it's going to drift down a little bit. And then in the last year of this cycle, which ends November of 2025, which is right. Oops, shoot. I moved that one out. November 2025, which is right there, that's when it goes ballistic. That's when it goes parabolic. And you can see my target up there. That's right around 250. Anyway, long-winded answer there for the question. If you have anything else real quick you want me to jump into before I move on to our markets today, I'm just going to run through some quick numbers here. But if there's anything else that you want to know about Bitcoin, now's your chance. Throw it out there. I hope that informed a lot of you about the math behind it, the structure, which I think is the architectural genius of this. Create a lot early on when no one uses it, but as Bitcoin gains adoption, we reduce the amount of reward for miners because Bitcoin's going to be worth more. So I don't need to give you 50 Bitcoin. I can give you 6 Bitcoin or 3 or 1. And over time, as Bitcoin continues to increase in price, the number that the miners get as a reward diminishes. Brilliant, brilliant architecture. Okay, so if you got questions on Bitcoin, type them in. I'm going to run through our top 7 markets here, and then we'll wrap up. I got. Again, I didn't want to do hour shows this year, but here we are again. What do we got? Ganesh says, with stocks, you know the intrinsic value, you know the USD loses value by inflation. How can we find the intrinsic value of Bitcoin? I would argue that the price of Bitcoin is its intrinsic value. It's typically the cost to extract Bitcoin, which you can calculate out by looking at the mining cost. That's your intrinsic value. Blue Diesel question, why does the halving create a bull run into the altcoins? Great question. The halving simply reduces supply. So the assumption is you now have the same amount of people buying Bitcoin. Let's assume everything stays the same. I've got 1 million, I'm making this up, but I've got 1 million people trying to buy Bitcoin, and they all want to buy 1 Bitcoin a year, right? Just bear with me. So I got 1 million people all trying to buy 1 Bitcoin a year. And if I look at the supply schedule, I know that there's right now 328,000 Bitcoin created every year right now until we get to the next halving. So that 1 million Bitcoin demand on 328 million Bitcoin created is going to drive price up. If the halving comes, and I know that now I still have my 1 million Bitcoin to be bought from these 1 million buyers, and I now know that there isn't 300,000 created a year. It now drops to 164,000. I have the same amount of people buying fewer Bitcoin being created. That's what surges it. Now, typically what that does, Bitcoin is the gateway drug. They said that marijuana is the gateway drug into, heroin, PCP, cocaine, all that stuff. I don't know if I buy all that. But Bitcoin is arguably the gateway into all things crypto. Most people start off by buying some Bitcoin. And as they have some Bitcoin, next thing you know, they're going, hey, what about a little Ethereum? What about some Algorand? Oh, you know what? I'll gamble on some Dogecoin or Pepe and, not listen to Merlin at all and buy these shit coins. That brings more people in. And that's how I got started, guys. When I started, I bought a Bitcoin outright in 2014. 2014 was my first Bitcoin. I didn't do anything with it. 2017, I started buying $500 a week of Bitcoin, Ethereum, and Litecoin. From there, I took my Bitcoin and other cryptos and I started buying other things. Now I've got a portfolio of 40 cryptocurrencies right now in digital assets, but it all started with Bitcoin. So I think that's what drives it. You have more people looking to explore. You get into the world and you understand the opportunity potential for digital assets. I was all about Bitcoin when I first started. Now I look across the spectrum of these 2+ million different cryptocurrencies, and I see some very promising things. We looked at one yesterday. Where the heck was I? I did it. Today's Wednesday. Oh, for my focus class last night, I analyzed a project called AMP, AMP. And AMP has a very, very interesting business model, which I think could be something that evolves into a much bigger business model. Okay, dude, don't know what you're bragging about. I got beach right down the street, too. It's covered in snow. You can go ice skating on your beach, right? Does interest rates affect the price of Bitcoin? I used to think so, Robert. I really did. I used to think so, that it was totally tied. And that as inflation got higher, more people would run to buy Bitcoin. But I felt that kind of got disconnected. I don't see it as much as I did before. I do think that if your dollar buys you less, there's an inclination to get out of dollars. So inflation kills the value of the dollar. So as inflation gets higher, I think there is going to be more inclination to buy scarce assets. That's why gold becomes so popular. Well, Bitcoin's just digital gold, and it's the most transparent asset in the world. You know exactly where every one of them is. You know exactly how many there will ever be. I mean, it is perfect math. There's no ambiguity. I don't know anything about the dollars or gold. I know the price. I know I like gold, but I don't know how much is there, right? Somebody could stumble across a vein in Africa that is 10 times as much gold as any vein in the planet. Or Elon Musk could find an asteroid with his SpaceX program that's solid gold nugget that's the size of the United States, and the price of gold drops 99%. I mean, I'm making up hypotheticals here, I know, but the point is, with all these other things that we buy, they can create more. You have companies can go, oh, we're going to release 1 million new shares. Well, you just diluted the value of my currency. What's for my shares? What's up with that? Why would people or businesses keep multiple wallets? Is there a limit as to how much can be on a wallet? No, Mark. So when you're talking about wallets, you're talking about Bitcoin addresses in particular. You can have as many as you want. You can have, if you want to have 1 million different Bitcoin addresses, go for it. Remember, with each one, though, you have a security risk because with every one of those wallets, you have to memorize your private key or find some way to store that private key. It can also be confusing, as some people in this room will attest to. The more wallets you have, the more addresses you have, the more crypto you have, the more things you got to pay attention to. And it's easy to kind of forget about stuff in the digital world because you don't get an account statement, right? My ledger doesn't send me an account statement. If I keep mine on, I have a wallet on here called the Trust Wallet. It doesn't send me an account statement at the end of the year. There's no tax document. So you really have to stay on top of these things. I built a spreadsheet that I fill in that shows me where every piece of my money is at in crypto. It's just in case I forget. I don't put my private keys in there, but it shows me where everything is at. You guys got some really good questions. I feel like I've sparked a little bit of interest here. All right, let me run through our top 7 because I got to wrap up. I wasn't planning again on doing an hour show, but there you go. Thank you for the question on Bitcoin halving. I hope that answered your questions. If not, you can type in the chat and I will do my best to continue to get those answered for you. Let's start at the bottom, work our way up to the top. Number 1 is actually, the numbers have changed, so I'll fix that in a second. But we had another down day for gold. Not so happy about that. But again, I've been saying the trend looks lower. Probably going to close that gap. Again, gold probably going to get down to that 1987 mark. I don't want it, but that looks like what's going to happen here. I may actually sell some puts on this next week as we get closer to it because I actually like the price point of that 1980 mark. I'm okay with that as a potential buy point. I do think it'll hold, but we'll have to wait and see. Bitcoin down again, 1.2% slide for Bitcoin at 42,810. Again, I think a lot of this has to do with the Coinbase testimony with the SEC, the court battle. If you have a chance, you might want to listen to some of it. The lawyers for the SEC I felt embarrassed for the SEC, honestly. Their arguments are not clear. They're kind of like ambiguous at best, and they're not really arguing their case well. Whereas Coinbase's lawyers are on point. I mean, they are very succinct, very clear. You can tell they practiced. You can tell they knew exactly how to come at this thing. In my opinion, and I understand I might be biased because of my love for crypto, but if you just look at these two sides competing each other, Coinbase's lawyers kicked butt. And it felt like the judge was siding with them. The judge was very intelligent in asking questions and making, she was pushing both sides. But it was very interesting to see that testimony or listen to that testimony as well. So we'll see how that impacts Coinbase, which here's Coinbase's chart. Wasn't that dramatic, slightly down 1.02% in the after-hour session, but nothing that crazy. I think Coinbase is going to come out of this looking very good. I think that they're going to end up winning this lawsuit with the SEC, and that may actually act as a further catalyst for Coinbase to the upside. Russell 2000 continuing its slide. Boy, we had that level drawn here at 1900. I was looking at 1886 has been my number that I keep talking about. Today we had an intraday low on the Russell of 1904. So significant drop, although it bounced off of those lows, only down 0.78%, finishing at 1925. NASDAQ also dropping about a little over half a point. About time, after those 3 solid days of consolidation and going nowhere, we had a breakdown, but not a lot of follow-through. Right, even though the end of the day was down 0.57%, still held its own and didn't break these lows. It was down much more than that at one point. I'll give you the exact number here so you guys can see it. At one point, NASDAQ was down 1.6%. It only closed down 0.57. So great recovery there. S&P, similar picture here with the bottoming tail. Again, we talked about this, the double top formation. It feels like it's going to come back down here before it start ripping up. But again, right now, if you were to do it the old school way, which is draw a box around this, like, let's see, where do I have my box? draw a box around this one and map out that zone, you're in the middle of it. So at this point, you just got to leave it alone and wait for it to break one way or the other. USD, this was actually the biggest gainer on the day today. We're in a new session, so it's not showing the gains. It was up 1.08%. We've seen a pretty big rise in the 10-year over the last 4 trading sessions. It was down around 3.91, and now we're at 4.13. So a pretty decent jump in the last 4 sessions on that 10-year. That's not going to help out the overall markets, I don't believe. That was number 1. Number 3 is the dollar index. Shooting star, by the way, folks. Shooting star on that index. Oh, boy. That means typically you're going to get a nice little pullback tomorrow. If that does happen, you could see a rip on these equity markets to the upside. So if I had a bias right now, I'd wait for a follow through here on the dollar index. If I see that Dixie close down below 103.26, which is pretty dang close to that right now, I would be going long if you got them. Markets will probably have a nice rally. And finally, crude oil, 0.22%. Nothing really noteworthy here. We've tailed out of this consolidation multiple times, but still stuck right in the middle of it, coming to that apex of the triangle here. I think the big breakout is going to come soon on crude oil. Anyway, there's your top 8 markets. Spirit Airline, yeah, we had that one up yesterday. Save. I don't know how did it bounce today. Oh, it continued on down again today. God, that was just such a horrific chart. The question I received from a buddy of mine, well, not received, but he asked me, he's like, hey, would you buy Spirit Airlines? I'm like, I wouldn't touch it with a 10-foot pole. Would I sell some puts at like $5? Maybe. It's way too risky, but the premium is going to be off the charts. I haven't looked at the premium for Save today, but I'm sure the premium is way, way elevated. Like you could probably get sell puts expiring Friday at $5 and get maybe 5 or 10%. I mean, that's how much this thing's been moving. It's absolutely crazy. Anyway, we will see what happens there. Will a new administration change what the SEC is doing? Yes, absolutely. Absolutely they will. Right now, as I mentioned, and again, I'm not trying to sway anybody political Republican or Democrat or Republican. It's just fact. Elizabeth Warren is clearly influencing Joe Biden's policies towards crypto and digital assets. And one would have to wonder, since he was appointed by Biden, does Gary Gensler, is he beholden to Biden? Is Biden telling him, hey, don't do anything with crypto. Don't approve anything with crypto. No crypto ETFs. Go after it. Because that's currently what Biden and Elizabeth Warren's policy is. If that were to change, you have, it seems like Vivek might be the VP to President Trump. And, I'm not a big Trump fan. It's just as a human being, I'm not a fan of his, but I like Vivek a lot. I really like his viewpoints, and he's one of the only ones that's mapped out a very clear path for digital assets. So we'll see what happens during election time. Again, I told you, it doesn't matter Democrat or Republican to me. It's about who's going to do the jobs that I want to see done, who's going to do what I think is best for this country, and there's a lot of initiatives there. But the change in administration could go and replace Gensler. I'm pretty sure Gensler's done. I don't see him getting appointed again. What can you expect from? What can you expect from a doggy? A kiss or an ass? Oh, wait a minute! You guys tried to draw me out to 1 hour, guys. That's it. I gotta run. It's actually gonna be an hour show because I do want to show you your earnings calendar, economic calendar. So dang it, I was not planning on doing an hour show. Dang it. Nah, I don't think Tucker would be. He doesn't have enough political acumen, I don't believe. We'll see. Kinder Morgan and Alcoa reported today. Here's what's happening for tomorrow, and then we'll go to your economic calendar, and I'll show you that one. Where's my Forex on here? Hold on. Let's bring up Forex Factory. All right, so here is your calendar for tomorrow for the economic calendar anyway. The 18th, you have building permits, Philly Fed Manufacturing Index. You have Lagarde speaking, which I think is a very important one. I know, Pepe. I was not planning on the hour show. Damn it, son of a biscuit. Earnings-wise, here's what you got. Taiwan Semiconductor, of course, the largest semiconductor company in the world. They're reporting earnings. You also have Fastenal and a couple banks like M&T Bank, but that's pretty much it for the big stuff. All right, that's it. I did an hour show. I'm out. Thank you, guys. Thank you for the topic. You guys wanted to know about Bitcoin halving. I think we gave a much deeper dive into the math, the mechanics, the structure, why it's important, supply and demand, destruction. You learned a lot about Bitcoin today. I hope that helped. Again, if you got people who are naysayers against it, you can share this video with them. If you have something you want me to cover, let me know. I can make a show on just about anything. So send it on in at TraderMerlin@gmail.com. That said, happy trading, everybody. I'll see you tomorrow. Take care.